Everyone, I'm back again with Alejandro, who is kind to go over Instacart, which just IPO'd this week in September 2023. So welcome back, Alejandro. What have you got in store for us today with Instacart?
Hi, Michelle. Hi, everyone. Again, thanks for inviting me. It's an honor. And yeah, we have a very exciting company today, Instacart, just IPO, as you said. It's a lot of sentiment in the market. You know how people get excited with new things. And I mean, I'm very excited to talk about it because I think there's a lot of common sense that goes into being able to value this company correctly. So yeah, let's get started.
All right.
So what is Instacart? Instacart is a delivery platform that connects retailers and shoppers, making shopping effortless. Obviously, as the gig economy is making everything easier, it's giving people the chance to work whenever they want, sort of. And this is an economy that we have to understand is coming into our daily lives, and Instacart is part of it. Instacart invented a new model for online grocery shopping by offering on-demand delivery from the stores. And I think it's composed of three big parts, which to make this company worthwhile in the long term, the three parts need to be happy, which is retailers, customers, and shoppers, which obviously, I mean, the shoppers are the people that deliver the food. So the business segments, Instacart Marketplace, partnerships with more than 1,400 banners and 80,000 stores. I mean, they're really, really big. It's about 85% of the US market. So, I mean, they're already basically everywhere. Instacart Enterprise is a technology solution that help retailers select their business needs to use Instacart in the most efficient way. So basically, Instacart gives the different retailers meet their needs. Not everybody needs the same amount of service. So they are building this platform that helps, like, for example, the small retailer has certain type of agreement with them compared to, for example, Costco. Instacart Ads combines the best digital advertising composed of precision, actionability, and measurability with the ability to move products off the shelves. I mean, and this part of Instagram to me is super interesting because this is where like advertising is really a great business. And again, they really not competing with anybody here because I mean, the people that offers ads on Instacart is people that are members of them, and a lot of, I mean, it's been growing a lot. I mean, I think it is great for the customer, but I will mention some certain points that I think are very important to understand the company later.
And who are the members, by the way, who are usually advertising on Instacart? Are they like grocery stores like Kroger or things like that?
I mean, basically everybody, you know, I mean, I've seen people like, I mean, I use them sometimes like, I don't know, let's say a supermarket gets like an over delivery of certain product. So basically to get the products off the shelves, they advertise that product so that way they don't like expire the product or get it out quick. So I mean,
okay.
a lot of people, I mean, a lot of companies or retailers advertise on the platform, you know, to get it on top, and just different types of advertising.
Okay, makes sense.
So the sources of income, the three, so fee for retailers, the fee from customers, and advertising revenue. Here, as we see the advertising part is been growing, which I think is very good because this is way more profitable for them. So basically, it's composed of about 65% that transaction, the delivery fees that they charge the retailers, and plus what they charge the customers, and the other 30 is advertising, which is from brands or even retailers. So what are strengths of this company? It's a trusted technology partner to the grocery industry. And again, this is very important because, I mean, a lot of newcomers might come out and just offer this service at cheaper fees, but obviously as a retailer, you want to trust. And as we said before, they have 85% of the market. Again, like I just said, Scale being the biggest online shopping platform for groceries is what interests most of the people because it's the way they can reach more customers. It gives many retail shops the ability to enter in an omni-channel model. And this is very important because, again, as we said, they are trying to fit every type of customer. And there's these little shops that are not able to really build this omni-channel model. But again, if you are not in the omni-channel era in this moment, I mean, you are falling behind. So this is a really good opportunity for the little guy. But again, I mean, it's not that easy because obviously the big guys have the big bucks. So I mean, they're going to be show more, but at least it's giving them the opportunity. It has a huge amount of information of consumer preference because, I mean, they're getting information for every retailer. And something that we love, I think, and Buffett loves, is they have a recurring revenue because everybody have to keep paying the fees and everything. 5.1 million members. I mean, that's a big number. It's almost 2% of the US population, right? Yeah.
Yeah.
So this is something really important, which I think is fundamental to analyze every business from a retailer, as long as you can do it. And this is like the economics of a transaction. So basically, the average transaction has $110. From that $110, the average revenue for Instacart is $7. And the total that customers and retailers fees are about $16, which means $9 out of those 16 goes to the shopper. So basically to pay that third party.
Okay.
Good for customers, good for retailers. Convenience, people can get their groceries saving time. I mean, this is great from a theoretical perspective. Retailers can reach customers at their home. Incremental sales. And this is one part where, again, that's how Instacart says and advertising their S1. I am not that sure about that because I don't really think just people are starting to buy more because, I mean, people have to buy groceries. It's not like because of Instacart people start buying groceries. What do you think about this, Michelle? I think, I mean, it is a fundamental point because, I mean, yeah, they sell it to the retailers as like, oh yeah, with Instacart you get incremental sales. I just think their transition. I just think, like, for example, me during the pandemic, I started ordering Instacart. I mean, it's not like I grew the sales. I just got my groceries through a different channel. What do you think, Michelle?
Yeah. Well, it makes me wonder if, depending on how the interface is like, if it's somehow suggesting more things to the buyer, what maybe they would need. So let's say if someone is buying a certain kind of grocery and they add, one type of thing, and then maybe there's something complementary, like let's say someone's ordering hummus, and then maybe they pop up and say, oh, do you want pita bread with the hummus? So maybe if you can make additional suggestions to the buyer, kind of like using AI models, perhaps that could lead to incremental sales if the buyer agrees and said, oh yeah, I need to get pita also. Or if in addition to normal groceries, that there are other supplies they forgot about, that maybe they need some supplies from a pharmacy. So if they're able to combine, some everyday things, because some people, when they go to the grocery store, they also have pharmacies inside them. So they might pick up their needed medication. So if they can combine a few things that makes the life of a consumer easier, and they don't have to go out of their way to still pick up all their necessities, then maybe it could have a good system. But I have not used Instacart myself, so I don't know how likely it is for them to generate these incremental sales for the grocer. I'd be curious as to understand how that system would work, and if they can prove that it actually works. Like, let's say instead of a normal shopper just going through the aisles by themselves, if you have Instacart, maybe it leads to a certain percentage bump of incremental sales. So if they can prove that, and the big chains like say Kroger or ShopRite, if they believe them, maybe that could have a ways to go to actually boost the supermarket profits too. But I don't know enough information to judge whether is that happening, or do you have more information about how the system would work?
No, again, as you said, I mean, I think your point is great and it makes sense. I'm not 100% sure, but yeah, I mean, what you say makes sense, and I guess they have to prove it to the retailer. But at the same time, I guess retailers are believing them because they are already present in 85% of the U.S. So I guess your point is great, and I am not able to define it perfectly, but I think what you're saying makes sense.
Yeah, and if maybe they're copying a little bit of Amazon with the recommendation engine. I know that more and more retailers are trying to incorporate that online. Like if you go to any e-commerce website, they're all recommending, like, if you looked at this, maybe you're interested in that. And it's the same with streaming and Netflix and so on. So the more that some of these channels can offer additional suggestions, and if the buyer agrees, that can only mean more sales, right? Hopefully.
Yeah, absolutely. I agree with you. And as I'm saying here in the next part, it says digital generates a higher ticket transaction, and I think it comes exactly from what you're saying. So yeah.
Okay, cool.
Yep. So customers get discounts and promotion from their home. I mean, that is great. I mean, you're sitting there, and as you said, well, maybe here also, like, you're sitting there and they create a promotion, and with those little pop-ups that come into your cell phone, and maybe that's also another part to increment their sales. So here's a market share. I mean, in 2020, I mean, they have 85% of the market. Now they've been losing ground, but obviously the market, I mean, they have been growing sales. So, I mean, the market has been expanding. Now, I mean, they have DoorDash, which was usually for restaurants, but now they're getting into this field as well. Uber. So, I mean, big guys investing here, which, I mean, is good, but the market is growing. Even though they're losing market share, they've been growing sales. So, I mean, the market is growing, which is obviously something we want to see as investors. A little of the income statement, as we see, the first part, I mean, the revenue has been growing. Ads, as we saw in one of the previous slides, been growing also. And here we see that in 2022, they made a income for the first time. They had a capital deficit of almost 800 billion, but now they're making money, which, I mean, obviously we as investors want to see this. The balance sheet, and this is a part I didn't like, and I wasn't able, before I saw this, didn't know how it show, but as we see, the accounts receivable are bigger than the accounts payable, which means the retailers are keeping the money from Instacart. So basically this is acting as the money that needs to stay. And I mean, we always want to see, just like, I mean, I'd rather see accounts receivable be lower than accounts payable, because we are not paying interest on that, and we want to be basically financed by the other part. But in this case, Instacart is financing the retailer in a certain way, because they have almost 800 billion in merchandise, I mean, that Instacart has to keep as their working capital, which, I mean, obviously with the interest rate so high, I mean, they have to basically pay interest on that. So I didn't like this part about that.
And do you think that's part of why, I mean, I know for a lot of supermarkets, the margins are really thin. So do you think they made this kind of bargain? Because, I mean, fundamentally, Instacart depends on the retailers. If there's no retailer, then Instacart can't do its part, right? So the retailer is the bottleneck. And do you think that's why they're in this kind of position where they have a bigger AR as a result?
Yeah, I mean, as you just said, I mean, retailers always tend to just pay the people later, even like when, I don't know, when P&G sells them something. I mean, obviously, I guess it depends per customer, and the big guys, I don't know, are probably being able to get better terms, but the small guys usually have to, I mean, they get paid way later than when they deliver the product. So I guess that's fundamental in the retail business. So,
Okay.
so the good and the bad. I mean, the subscription model, I think, is good because, as I said at the beginning, for example, when the pandemic came, or even in the normal life, you just basically subscribe. Instacart has what you order, and most people tend to order the same thing. So I mean, it just makes it so easy. Just like, okay, this is what I'm going to order. It's Sunday. The groceries are done, so I just log in, click a button. They already have my order saved. Boom, and it's in my door. I mean, what can be better than that? So I mean, from this fundamental perspective, I think is a great business. So they make it easier for the customer. And another thing I really like is that advertising is 1/3 of the gross profit, which, I mean, advertising, again, it doesn't really have many tangible assets, which makes it very profitable. Now, the bad, it raises the price per transaction, and that is a factor for certain people. I mean, not everybody cares, but let's say in a grocery, like they were saying, I mean, $110, but I mean, out of the 110, I mean, you as a customer have to pay, like, I don't know, around 16% in fees, or no, I'm sorry, like $10 in fees, but at the same time, you have to tip the shopper, because obviously, I mean, so that doesn't come into that part. So I mean, so for $100, you almost finish paying $125, which it raises the price. Again, the higher the spectrum of what you make, so 80, 100K people probably do not care, but lower end are going to care. So this part, I think it makes it depend, but obviously, I mean, we all want easy stuff. So the people that deliver have the choice not to work in next day. So I think, I mean, for example, in a big game day for football, I mean, there's maybe times where they are not able to get enough shoppers to go do the delivery, so they have to start offering higher rates. And that part of the, I mean, it's not like, for example, in a restaurant, you sell $1,000 in the morning, so you assign 10 people. This part for Instacart, I don't think is that easy. So obviously in the S1, I mean, they talk about their good parts. As Charlie Munger says, nobody wants to talk about their bad parts, but I assume this is very difficult for them because, so again, the experience for the customer might not always be great. I personally had a good experience. There was one time they misplaced my order, and I called them, and basically they gave it to me for free, and it was just like 2 houses away. But again, wow. I mean, from the business perspective, I mean, they just lost this sale, which
right. And I wonder how often that happens, because I mean, hopefully it doesn't happen too much, otherwise they'd be in trouble. But like, I wonder if, like, say they subtract that from the shopper's income if the shopper delivered it to the wrong place.
Yeah, I don't think they do, because here's where I think is the biggest problem for them, and is the economics for the shoppers. And what I mean by this is, like, obviously you as a shopper, you go and do delivery and say, oh yeah, I made $200, but at the end of the day, not many people take this as seriously as you should, in the way that it's a business and you have depreciation on your car. You have to really take into account every minute you spend doing this delivery, because you say, oh yeah, I made 200, but I mean, the car is depreciating, you're spending gas, you spend I mean, all these expenses that are not that clear to many shoppers. So at the end of the day, I think it really depends, because, for example, if you are delivering a SUV that consumes the double of gas that a little Corolla, I mean, it's not the same thing.
Right.
So when shoppers really get this clear, and with time passes, I mean, a lot of YouTube people are talking about this and obviously informing. So when most people are informed and they say, oh yeah, maybe I'm risking to get on a car crash, I'm depreciating my car, and I'm just making, let's say, I don't know, $20 an hour instead of 18 that I can be just cash registering for some big retailer like Costco or something. So this part is what I think is going to make it hard for them. Again, I am not 100% sure. I think there's not that much information about this yet, but obviously it depends per sector, per state. So this part is the big deal, what I think might hurt them in the long run. But again, that is my theory. What do you think? So,
Yeah, and I think that rings true with if we think about similarly with Uber Eats or in general Uber and Lyft and DoorDash, like they all have this struggle of all the kind of more freelance gig economy workers who they rely on this because maybe they were laid off from a different job and now they still have a car, but they need to make ends meet. So maybe they're doing this to pass the time, to kind of like generate something is better than nothing. But like you said, there's a lot of additional risks, and it's always a trade-off, right? Like instead of the buyer who's at home taking their own car or public transportation to go to a grocery store and buy it themselves, they're trading their time for money. So that trade-off is now going to one of these shoppers, and the shopper has to decide of all these involved factors, like shopping for all these people and using their vehicle to deliver, if that's a good trade-off for them and if they're making enough. And I'm sure the same question that a lot of Uber and Lyft drivers are asking themselves of, am I getting my money's worth in spending this time this way, of how I would like to generate income. So yeah, I think that's going to be an ongoing challenge for this overall delivery industry, whether it's food or groceries. It's like still some of the same challenge, I think, right?
yeah, I totally agree. That, I mean, and I think that can be their Achilles heel.
Yeah, but I mean, even still with some of those challenges, it seems like there's a rising momentum for this kind of service. Like more and more people want to have the convenience of the groceries delivered, and they want their time back to do other things. So it can be really valuable for people who really need that time back, and it can be a big lifesaver if someone is strapped for time. Maybe they have a lot of family members to take care of, and they have their work, and they really just don't have time to really be dedicated to shopping at some of the retailers. So I could see that being a big benefit to some people. But there's also some other kind of warnings that I've seen. Like sometimes when I'm at a retailer, like a grocery store, I might see a sign that says no Instacart shoppers. And I don't know if you've seen that, but sometimes I see little signs like that around, that it makes me wonder why some of these places say no Instacart.
Oh wow, I haven't seen that, but that's not good for them.
Yeah, like it makes me wonder what that means, because is that saying to, I mean, maybe it was in self-checkout, like maybe they don't want the Instacart people to go to the self-checkout, and maybe they want them to go in the normal, where there's a cash register person doing the transactions. I'm not sure, but it was a little confusing. I don't know why. I've seen those little signs here and there, and I don't know what it really means because I haven't been affected by it, but it does make me wonder. And the other thing that maybe we haven't gone to yet is the IPO. So why don't we kind of talk about that a little bit? What are your thoughts on how like the IPO went, and what do you think it means for their stock?
Well, I mean, as we were discussing, I think before, the first day raised 10%. I mean, everybody excited, and obviously everybody wants new things. Expectations is a double field sword, I think. So it went 10% up, but now it closed at below the IPO price, which is $30. So the total market cap is around 8.5 billion. And as we saw before in the slide, I mean, they're selling around 2.5 billion. So basically, sales to market capitalization is a little below 4. So I think it's this. I mean, it's definitely a business that has very low tangible asset, which I mean, it makes it very profitable. It has really good fundamentals like the subscription model. But again, obviously, as everything, it has its problems. And I think all that we have mentioned today is really good points to take into consideration to be able to value it right. So yeah, that's a little my thoughts on that.
Right. And maybe, maybe it's a little unlucky recently that they IPO'd in the same week when the Federal Reserve mentioned something about how they're going to hold rates steady, but there might be one more hike, which kind of depressed the whole stock market. So maybe it was just a little bit unlucky that, let's say they had IPO'd earlier in the spring or summer, they might have had, more of a tailwind instead of a headwind right now in the markets, with markets kind of being a little more volatile lately.
Absolutely, that's a great point. But if we are able to value it correctly and get confidence on it, it's an opportunity for us.
Yeah, and it does seem compelling that they're able to get $7 of revenue per transaction, right? So
yeah, but that is. I'm sorry if I didn't clarify that correctly, but that's gross revenue. It's not like net income.
Yeah. So, I mean, I'm sure people who are interested in studying this company further would need to look into what's the final net income and the final free cash flows to really come up with their own valuation of what is this kind of company really worth. And maybe they need to compare it to Uber or other ones that have also gone public, right?
Yeah, absolutely. The only problem right now for me, I think, is there's not that much information out there. Only the XS1, which I mean, I think is pretty good and pretty detailed. But I mean, there's not basically prior years that I found to compare. So I mean, they might be, but I don't. I mean, since they weren't public, I mean, they usually won't be.
Mm-hmm. Well,
Yes.
and do you think there's any merit to try to compare, like, let's say more quarters go by and there's more performance? Do you think it would help at all to compare some of the delivery, not only to the direct competitors like DoorDash and Uber, but also like how does it compare to the existing e-commerce model of like an Amazon, where Amazon has way more refined logistics of how they deliver, but then they also sometimes depend on everyday people who have like a minivan, and the people in the minivan are also making some deliveries. I don't know how much information exists about that, but I wonder if there's any merit to comparing it to how Amazon does it.
Well, the only thing that comes into mind from you saying that is a graph that precisely was in there as one, where they said that, for example, most of the other categories that wasn't grocery, like let's say like computers and all these different categories, have a way higher recurring acts per customers. Like groceries is only at 12%, while equipment and sports guides and all of that is way more developed right now. So again, it gives the grocery and Instacart the possibility of growing. If you know what I mean. So
yeah, because those are like, if they delivered those bigger ticket items, they can probably get bigger fees from that, right?
yeah.
Yeah, that makes sense. And I could see that, like, let's say they want to get appliances from Best Buy, maybe like get a refrigerator, maybe if they're able to deliver that. I don't know if they can, but like if Instacart can become the more delivery arm instead of a company having to figure it out itself, that could be a benefit to kind of get more economies of scale, maybe, right?
Yeah, absolutely.
Okay, good to know. Yeah. Well, hopefully it works out. And I think like it's really fascinating learning about companies that do their initial public offering and are now in the stock market. And, you would hope that by the time companies now are ready to IPO, that they're in a stronger financial position because, there were so many IPOs in the pandemic time, like in 2021, and now everything's kind of like become a lot more subdued and a lot of companies cut their valuation. So if they're coming public now, you would hope that they're in a stronger position to make it economically. What do you think?
Yeah, definitely. I mean, I think obviously everybody, when they're IPO, they're trying to get their highest price for their value. I mean, the most amount of money. And as you said, I mean, it really depends a little on luck, on when you decide to go into the market. And but I mean, we as investors, as we always have learned from Buffett and them, is, I mean, what's important is being able to get to a conclusion, being able to get to the right value for that company, being able to see this company in how it's going to look in 10 years, more than the, I mean, obviously that is the Instacart kind of say problem to get on the right track. But for us, I mean, the lower it gets, the better, because if we are able to get to the correct and positive conclusion on the company, I mean, we're going to get the best price and the most profit in the long term.
Yeah, yeah, for sure. And I think, like you're saying, the trends seem like they're encouraging for Instacart, with the more people doing delivery for, saving time, and maybe a lot of people working more remotely. Maybe it can be a big help for people who are not using like cars or public transportation as much and staying more locally. So yeah, I could see this having a big impact in future years.
Yeah, absolutely. So I'm gonna go one more slide I have a couple of questions that I want you and, I mean, the people that see us to think about one value in this company.
Okay, sure.
So basically, I'm not going to answer. I mean, I'm just going to kind of raise it. And is it really exposing new brands or giving more power to the big brands? I mean, it's a good question, because obviously, I mean, the big brands are going to spend more for the ads. But so, I mean, is this real? How the more premium grocers like Publix or Sprouts are going to benefit when people can compare the prices so easy? Which, I mean, I guess obviously it affects, because if I see, let's say, I don't know, a deodorant in Publix selling for $4, and I see that Costco sells the same deodorant for $2, even though it's in bulk, I mean, it's great for customers, but I'm not really sure it's great for every grocery place to be exposed this way. Is this really a good business for shopper? I mean, this is like, as we discussed before, I mean, good economics. Does it benefit grocers? Does it benefit consumers? I guess definitely benefits consumers. I am not 100% on the grocers part, because, I mean, they still have to pay a fee, and before, I mean, they didn't have to pay that fee. But again, as you mentioned, which I didn't thought about that before, the AI push notifications can help them. And what about the competition? Uber, DoorDash, and others. So just five questions that I think is very important to answer yourself to get to the right conclusion and to be able to see the future into this company, which, I mean, I do find fascinating. But yeah, I mean, we as investors need to get to this conclusion ourselves, and we here are trying to obviously expose a lot of points that I think are very important to get to the most assertive conclusion, because obviously nothing is perfect.
Mm-hmm.
Yeah. So yeah, so that's what I have.
Oh, okay. This was the final slide.
Yes.
Okay, I just want to double check, make sure that this is definitely a lot to consider and think about, with really great questions that any serious investor should weigh and decide for yourself what you think the answers are. And so, time will tell of how any company will perform. And as long as companies are delivering value to the end customer and, helping the ecosystem in some way, I think that there could be staying power for a lot of companies that are trying to come up with innovative solutions to problems that, maybe this was not a possibility in the 90s, but maybe now with everything that all the advancements we have in technology can have better staying power. So yeah, I think it's exciting to, see all this progress, and I hope Instacart continues to do well, and I hope everybody who participates in that service gets to benefit. So thank you so much, Alejandro, for sharing all this with us today.
Yeah, thanks to you for inviting, and it's always a pleasure and an honor to be sharing with this with you.
Well, thank you, Alejandro. Till next time.